Good afternoon. This is Ken at Tortoise Capital with a review of the weekend trading report for August 31st, 2018. Market is in bullish normal conditions still. On an annual basis with NDX 260, it's overbought at 97 out of 100. On the short term 10-day NDX, we are neutral at the high end of neutral at 79 out of 100. 80 would put it into overbought conditions, so we're close. In the market mosaic, price relative to the 200 is a white bullish 6.38%. The slope of the 50 is red neutral at 0.54. ADX improved to 18, which still is neutral, but it is slightly improving in the direction of the bulls. The risk index is the 30-period moving average of the VIX divided by the 10-period. 1.0 is the boundary between risk on and risk off. Current reading is at 1.04, and that puts us just into risk on. We take that score and look at the last 5,000 trading days, and we compute the risk Z by finding the average and the standard deviation and computing the Z-score. The Z-score is minus 0.07, so even though we're on risk on, this is slightly below the long-term average. But you see we've had a swing low, a high, a higher low, and it's finding support here. This postures the market short term for swing traders in a critical state, ready to run another leg up or to collapse into volatility down. This is an exceptionally critical state where a move in either direction is equally likely. Our next reevaluation for blended monthly rebalancing is Tuesday, and so we'll be taking these symbols here, and it's basically the same ones as last month. So the winners continue to win, and then you can see the other leading candidates from the different ETF portfolios. So that what that tells me is that the Qs, small caps, and real estate remain excellent. So we would be looking for ways to reinforce that move during the weeks ahead. Looking at some of the ETF BMR portfolios, ETF 13, again, Qs, Russell, real estate, all had pretty good weeks. Have had pretty good months. Latin America emerging markets still suffering. In the ETF 32 portfolio, this is the much expanded version of that global model. Again, about half and half are on cash versus buy, and you see it's mostly the euros and the globals. Inside the US XLV, the healthcare and discretionary and technology are really dominating. In the Dow 30, Apple had an exceptional week and month. Microsoft and Cisco the same. Down at the bottom, got crushed in Caterpillar, GE, Intel, Boeing. If I was bottom feeding, I'd be looking in this stack right in here, especially this Boeing probably looks like a potential washout or a deep value play. Intel has been slowly recovering after an earnings sell-off, and Caterpillar, I'm just always interested whenever that's the worst thing in the world. That's such a great company that I'm automatically interested in it. Apple is certainly a continuation play worth looking at. In the sector spiders, no surprises. Healthcare, farms, software and services. Suffering down here in the energy complex. ETF Max looks at a 500 dB listing of liquid ETFs. These are the top 40 or so. Some again, it's looking like small caps and healthcare combined. Farms. I like that one. Market health check. We've got a third leg up here, so this is leg 1, leg 2. leg 3. The slope of the 10 is higher than the slope of the 30. That's favorable. It's out of the river. The dragon is on the north shore of the river, providing support. We've had an orderly pullback of a couple days, but this was an all-time high right here, and we're deep into the summer and expanding, and we have room to grow. So another $6 to $8 in that direction is not out of the question. ETF regional report, just the U.S. is on buy signals. That leaves us at 40 and 60. It's the globals that are on cash. It's tech, small caps, large caps, mid caps. Again, discretionary, healthcare, and technology, no surprises. All U.S. all the time, small caps and technology. Mexico has had a nice rebound, has differentiated from Brazil. Real estate continuing to do well. But real suffering here in Asia and in Europe. See the same patterns in ETF 30. Green and green are the long-term strong ones. Mexico has made a nice move here, green and white. So green and white means it was good and now it's great, and time to exploit new strength and possibly a new leader. Shifting to the daily. No signals, channeling, and overreaction. You see the usual suspects here for the 10-day max pains. Some of those ones that had that we saw before, Boeing and Caterpillar at the bottom of the stack. That helps explain why. Lots to choose from on the Dow 30. We've got a number of good frog quality numbers. We have 4 symbols on single digits for RSI2. We've got some good auto framer reward to risk ratios, plenty of 551W. So these are ones that had an up day on Friday or a white candle and were postured for second day success. So Merck would be one that's channeling, 551W, 2-to-1 auto framer. That's certainly on my short list. Coca-Cola also, 4-to-1 reward to risk, a good frog number, and 1 on the RSI2. Let's see what that looks like. All right, so this is what that runaway pain in Coke looks like. Big collapsing dragon here. Violated the river. The 30 is getting ready to leave the river shortly. That will be the beginning of trending behavior. But you notice that there's still a long way for that to go down here to the next support levels, approximately here at 43 and a quarter. And down here at the belly of the hump of that dragon, so a lot of room to go. This was that collapse. This was that pocket entry on a high, a lower high, and rolling over from this double top. That RLXD entry with a stop at Z1 gets you in the money. Here's the next support level is probably this fair value, the RL270 at 44, and then it's here, and then it's here. Something like in KL there. Now, in our upcoming December workshop for swing trading, we'll be developing, the detailed trading plans of how you go about framing this trade at these different inflection points. And I'll give a detailed. I'm going to prepare a detailed case study for this one tonight, just in preparation for that course. But you may be interested in either the residential course, it'll be the 1st and 2nd of December in Leavenworth, or getting the online and home study version if you can't make the trip. Send me an email if you're interested. Okay, back to the report. Yeah, lots to choose from here on the Dow Tactical. In the ETF 30 Tactical, you get strength, one-day strength in Brazil and Latin America. No RSI2s jump out. Some good frog quality numbers. XLP, consumer staples at 2.7 to 1 in the auto framer anti-channeling signal. Let's take a look at what that looks like. Which one was that again? Sorry, that was XLP. And there we are, perfectly suitable, long, strong, positive move. The river is well up. The RL270 has rolled up. It is just tipped into the fall after a nice run up in this from the spring to this. That's where it got into the summer. That's why you like to know that transition. This is where you picked up the long side bias, according to MACD histogram. Now, there's very little in that structure that would tell you that this is the follow-on move, but that's why we do the math. And so now we've just careful move. We could frame this one as a return to the previous 10-day high around 55.5. But if this collapses, you notice that the Baby Dragon and the RL10 would have both collapsed. So that would be an auto short with the target being down to the RL270. So the fact that we've got a really nice tightly congested range in here, we'd be looking at this kind of a frame of this type, and we would take this area in the middle as the yellow zone, and we'd be looking to get long on a violation to the upside, or looking to get short on the downside. Just one example of a quick frame. Testing the upside, I'm going to go the top of the Baby Dragon and the RL10, so approximately there, right around Z2, reasonable price target to the upside. And then to the downside, we're going to play, I'm going to say right here by this, the previous PSAR, but then also down here at the Z2, and down here at RL270. I like all of those as support levels. Okay. In the pinch and stretch, Apple, Cisco, and healthcare are the greatest stretches above their their BB30. And the biggest stretches away to the downside, Coke and Boeing, not a surprise. The most expanded pinch boxes, these are the ones that have had the largest directional move. And you can see Brazil has an exceptionally widely stretched river, and it's 6% below its Bollinger Band mean. And that's so that it takes a long directional move to get that bad. Let's take a look at some super pinches in IBM and JP Morgan. As you know, that's one where you have both a compressed and abnormally compressed pinch box, and all the RLs are tightly compressed as well. So let's take a look at IBM. Super pinch. Yeah, when you get these kinds of super pinches, you get large moves that break out of those. Here was another one. It gave us a big move down and a big move up, but it's pinched again. So you get the RL270, the 90, the 30, and the 10 all within a tight cluster, and this abnormally sideways pinched price action. XLF was one of those as well. So again, super pinch in here. A little bit easier to see. So this is one where I'd like to play a breakout, a collapse below the Bollinger Band 30. I would like to be short, and then I would reward upside movement here, let's say above the RL30, or if it breaks through the dragon, I think right around there, with the idea that we've had one leg up, one orderly pullback, a second leg up, a pullback, and now a resumption of the trend would not be surprising. But a collapse here would suggest that we're en route down to Z3, and then down here to the belly of the dragon. So that's what super pinches look like. Let's look at JP Morgan while we're here. Yep, almost a little easier to see. So you got the 270, the 30, the 10, and the 90 all tightly clustered. You see the Z3 lines are pinching in abnormally so. The zero line right here. So this is in a almost a straitjacket of fair value and lack of volatility. So a breakout in either direction, and you could see a move of, you know, $15 like this one, or a $15 move back down to support. So that puts this in a very critical state. And I would trade this one as a breakout in either direction from Friday's prices, and then use ruthless risk management to get it done. So I really like Morgan right there. Auto framer, the usual suspects, mechanically setting up. There's XLP and Coca-Cola for you. JP Morgan already built, the trade frame is already built for you here. In the regression line fractal framework, again, top shelf, these are the deep value plays, the most numbers of ATRs below their long-term fair value. So Intel is 7.5 ATR below long-term fair value. What's that look like? Looks like this. Long-term fair value, that's 7.5 ATRs down to here. And that's how far it has moved from fair value in this move. But it's made a low, a lower low, a lower low, and now it's made a recovery to the PSAR, pulled back just on one day, and so this is almost like a washout or a deep discount. You can see it's already gone from winter into the spring and approaching the summer, so there's reasons to believe that if it moves through that PSAR and the PSAR flips, then we'll come up here and test 52 and then back to the long-term fair value. So I like Intel. Daily squeezes. The 4 seasons of MACD on dailies for the Dow. Depending on which, if you like the spring, you're looking for things that have come below the zero line and started to move up, and you get these kinds of grinding upward moves. When they break the zero line, like here, it becomes the summer. You get a continuation of that spring move, and that combination of spring and summer can be amazing. And then caution as it rolls into the fall to preserve the profits from the growing season. And then in the winter time, you're looking to get possibly short, or at least start looking for the first signs of spring, and that's where you'd see the signal line crossing the Bollinger Band mean here, or the PSAR flip, or the formal closing of the winter season and the start of this spring. So somewhere in this region, you pick up that long bias once more. Looking at the z-scores of the regression line slopes, the 90 is still grinding forward, so this is a long-term bull move. The 10 has found a little bit of support, but is not exceptionally stretched. It's right at the edge of the 1.0 z-score. And the 30 has found a new life and made a low, a higher low, a higher low, so there's still room for this to get better. All right, that's everything I wanted to cover for this weekend. This is Ken at Tortoise Capital. Keep your risk measured and your powder dry. Notice how we've recovered all of that harsh sell-offs in here, and the grinding bull continues, and it's at all-time new highs.